My three biggest stocks, Meta, Tesla, Amazon, all three are trying to get their hands on as many NVIDIA chips as they possibly can. There's like this thought process on Wall Street. They don't really understand. They think like, okay, these guys are just going to buy a bunch of H100s and then that's it. It doesn't work like that. The problem is, as these AI applications and other things continue to boom and get bigger and bigger and bigger, you have more needs for more chips. Woo! Hi, folks. Hello, hello, hello. Oh my gosh, do we have one today, folks? Oh my word. Woo-hoo-hoo! This is going to be fun. This is going to be fun. We should have some fun here after hours. We got NVIDIA reporting. We've got Cheesecake Factory reporting. We have Lucid reporting, which amazingly they haven't gone out of business yet. We have Rivian reporting. Additionally, who else is reporting after hours? Etsy? Etsy? Maybe a few others, okay? Alrighty, folks, we got a lot to get into in today's video. Oh my gosh. Yeah, it's a busy one. It's a busy one. Yeah, Palo Alto Networks. So as of yesterday, I believe Seeking Alpha is delayed here. It was a $115 billion market cap. Obviously, it's not that market cap anymore, but it was a $115 billion market cap. And that baby just straight up like it's a penny stock. Oh my gosh. Now, that leads a lot of people to be scared about big dog NVIDIA here after hours, right? Thinking, oh, NVIDIA, it's going to do a Palo Alto Network, stock's going to crash, this or that, okay? There's a big difference between Palo Alto Networks and NVIDIA. No disrespect to Palo Alto, but NVIDIA has been coming through with shocking numbers quarter after quarter after quarter after quarter. So, you know, slow down a little bit in terms of thinking, oh, you know, it's going to do a Palo Alto Networks type thing. It might do an opposite of a Palo Alto Networks. The expected move for NVIDIA stock, according to Wall Street, they're expecting the stock after hours to move about 11 percentage points. So, we'll see. The thing is, if you look at just the past couple trading days, NVIDIA stock price is down about 10% or so in the past 2 trading days. So I kind of almost think like maybe there is 11% upside coming for the stock now that it had that downside. Because then all the option holders, a lot of them were killed because a lot of the put guys are going to keep their puts into these earnings because they're thinking, okay, it's going to tank, it's going to tank. Then all of a sudden it goes up, but the call buyers also get screwed because a lot of those call buyers that were buying all last week and maybe even on Tuesday morning and whatnot, getting ready for this earnings, those guys get screwed as well because the stock will go up, but it's really just recovering where it was at. It's not going out of the money, which is what a lot of people that would be buying calls need. So we'll see. If NVIDIA knocks out of the ballpark and that stock goes flying, Palantir is going to be right back at 25 again, probably on its way to 27. So do keep that in mind. But for now, Palantir is at that 22 range. Just all the momentum out of AI has kind of been zapped out last couple trading days here. So, man, that goes for all these guys. I mean, if NVIDIA goes down 10%, NVIDIA is just like a huge proxy for all those AI-related stocks, right? Even though NVIDIA has such a different business model than a Palantir, they kind of, right now at least, are getting all kind of grouped together because people don't really know exactly who's going to be the biggest winners, how big of winners they're going to be. And so they're just kind of grouping the whole bunch together right now. Well, I wonder what's going to happen to Lucid after hours. What is Lucid even at? I'm going to look up Lucid real quick. What the heck is Lucid? I know they're in the gulag. $3.64. Man, if you're ready to see some ugly financials, get ready to see Lucid's financials. Rivian should be somewhat okay. $15 Rivian's down to. I mean, the problem with these companies like Rivian and Lucid is their numbers have been so bad, especially Lucid. That's a whole other level of bad, right? But there's not a lot of momentum in EVs right now, and so when you don't have a lot of momentum and you have bad numbers, it's devastating to these guys, right? By the way, the numbers to keep in mind in regards to NVIDIA here, okay, is, we need to go to quarterly. So in terms of this quarter, NVIDIA's got to come in with something with at least a 5 in front of it, if not a 6, for this past quarter as far as EPS goes. They're going to need to come in with something over $21 billion for this past quarter. And then for next quarter, they're going to need to guide. If they do guide for EPS, they need to guide to at least $5.50 to $6, if not above that for EPS. And they need to guide to $23 billion plus in terms of revenue for next quarter. Minimum of $23 billion. $24 billion, then we're really talking, and then we can fly. If they come in with a 25 or up, whoo, look out. Then the thing with NVIDIA is, the amazing thing to me at least, is NVIDIA's not trading rich, right? So it's trading about, this is why NVIDIA still has potential a lot more upside. And this is why I'd be very scared to bet against this stock going into these earnings right now, okay? Because here's the deal. NVIDIA is trading 32 times expected numbers for this year, right? Their fiscal year ends in January. So 32 times on a company growing as quickly as NVIDIA is growing, it's not high. That's not high at all. So, yeah, it's very different than a Palo Alto Networks that went into today at a 60 PE or something like that and then came in and missed expectations. With NVIDIA, you could be talking about a beta expectations and obviously their, a lot more growth expected there. So just some food for thought. Obviously, NVIDIA is a big dog reporting after the bell, but Cake's also reporting. And in terms of Cake, they are expected to do 73 cents of EPS, which would be 30% growth year over year. They're expected to do revenue of $876 million, which would actually be down about 2%. And I'm very surprised that analysts are that bearish on this quarter. I'm very surprised. So Lucid's expected to report 32-cent loss, which is a massive number, by the way. Don't let that number fool you. It's insane. And then in terms of revenue, this is a disaster for Lucid. Analysts are expecting their revenue to be down 30% year over year. Lucid's supposed to be a growth company. Literally, like Lucid, like that's the only reason you would invest into Lucid is because you're like, I think they could grow huge and these sorts of things. If you're not a growth company, if your revenues are going to be down 30% year over year, I mean, that's just ridiculous. So Lucid's a flipping flapjack mess, right? And then we have Rivian reporting after the bell here. And then they're expected to have revenue be up. See, Rivian at least is expected to have very nice growth. Rivian's growth is expected to be 90% for this quarter, right? So this is why, if you look at Rivian versus Lucid, it's pretty clear to me the much more compelling stock, if you told me I had to buy one of those two, is very, very obvious I would buy Rivian over a Lucid, right? And plus, I like the Amazon backing, the Amazon relationship they have there, and those sorts of things as well. But it's like one company, revenues are going down substantially. The other company, revenues are skyrocketing. Both companies are big money losers. But the question is, who's got at least a chance to get to profitability? Well, it looks like Rivian, because you can't get to profitability, right? You can't get to profitability if you can't scale. You have to get to big scale to get to profitability. No different than Tesla Tesla, right? Tesla Tesla didn't get to profitability until they reached big scale, right? By the way, Tesla's holding up well. Given the market we're in right now, and NVIDIA down 4% plus, the Palo Alto Networks move, I can say Tesla Tesla is actually holding up pretty well. I mean, you look at Tesla, right? They didn't get profitable until they were doing, let's see, net income turned positive in 2020, right? $690 million. That was our first year of a profitable net income. And by that time, they were doing $31.5 billion of revenue. So that's the thing, like, if a Rivian or a Lucid, if they want to get profitable, they're likely going to need to get to 10 billion, if not tens of billions of dollars of revenue a year to hopefully flip to profitability, right? Like Tesla did. That's tough. I have a pretty strong feeling that there's a lot of people. The thing is, you got to understand this about NVIDIA, okay? There's so many people that have been waiting to really deep down buy this stock. But they want it to go down first. They want it to make a downward move. You know how many people are sitting on the sideline, been watching NVIDIA just go up and up and up, and they're like, I'll buy it on the next big dip. Maybe after the next quarter, they'll report a bad earnings, and the stock will go down big. You know how many people like that are out there? Investors in the market, hedge fund managers, they're just waiting for some sort of opportunity where the stock goes down a bit so they can start their position and get rolling here. Dude, oh my gosh. Oh my gosh. I wouldn't want to bet against it. That's all I'll say. No, 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 no. If this baby goes 680 plus before the end of market trading, woo! Woo! Watch out, shorties. That's all I'm going to say. So, yeah, here's a problem, if you're an NVIDIA short going into these earnings, right? If the stock goes down, right, let's say the stock goes down in earnings. Let's say they beat on all their numbers, but the beats aren't like incredible, like, whoa, it's just like a shocking beat. The problem is the shorts are going to need to cover fast because there's no way you're going to want to stay short NVIDIA unless like literally the numbers went negative or something crazy like shocking happened that was like, whoa, NVIDIA's business just fell apart. So therefore, you need to cover your short quick. Well, what happens when shorts start covering, it creates a big mess to the upside, right? One short covers, they have to buy back their shares. Another short covers, buys back their shares. And another. And it just creates this massive potential short squeeze in the stock when it was like, dang, man, like we thought we had it. So you have to be very quick as a short to, let's say the stock is down 5-10%. You're going to be very quick to take that and run. Unless, once again, the whole story deteriorated, which is likely not happening. So your hope is maybe the numbers are starting super impressive. So the stock goes down 5-10%. You have to be quick taking that profit. Or you could be left holding the bag in a big way in regards to that, right? And that's why the risk reward, the setup there is it's an ugly setup because you're banking on the whole business deteriorating. And I'm just like, I don't know if that's going to happen. And as long as they come in, great numbers and they beat, I can tell you there's a million, billion, trillion, gazillion people that are waiting to buy this stock. As long as they come in, beat those numbers. Woo, baby!
He's waiting for NVIDIA out in overtime. Phil LeBeau on EV maker Rivian also.
5 minutes.
Plus, Bob Pisani sitting next to me to break down the crucial moments of the trading day as we do head into the close. Christina, we will start with you because all eyes are on NVIDIA.
Yeah, all eyes on NVIDIA and the actual high earnings bar that NVIDIA has set. What we do know from this earnings report, and hopefully we can keep going with the elements in the prompter in there.
I love cake under 30.
What we do know is that shares
beautiful.
have dropped about 2% today and has also fallen just yesterday too after some profit taking. So these are two blowout quarters that we just saw. And, expectations are especially high, especially yesterday after Google said that their new AI model will use less compute. So when you're using less compute, that implies less chips from NVIDIA. The biggest takeaway, though, for NVIDIA's earnings, Scott, is demand sustainability beyond this year. So it reassures investors to hold NVIDIA for the long run. There are concerns that GPU lead times are coming down because supply is improving, and that means demand gets filled sooner than expected and leads to a possible slowdown. So again, that points to GPU demand sustainability beyond 2025, a big issue. We'll also want details on the launch of their next AI chip, and lastly, details on chips for China given export restrictions. China contributes roughly, 25% or 20% of data center revenue, so they need to maintain steady demand from that country and that region. The street is expecting revenues of $20.6 billion, with the buy-side whisper you can see on your screen much higher at $23 billion. Expectations for the following quarter guidance is actually $25 billion, so you can understand how high this bar is, and it's really just led by data center revenue. For this upcoming quarter, we're expecting 20% quarter-over-quarter growth. So can we hit that?
675, 68. Wow. If it goes 680 before the close,
will be felt on the NASDAQ as we saw today. Any stock downside, though, I'm going to say, could be short-lived.
3 minutes.
NVIDIA has its next big AI event March 18th, and shares tend to move higher after that event.
All right, we'll see in just a bit. In overtime, by the way, NVIDIA shares are off their lowest levels.
Yeah,
so we'll keep watching that stock. Phil LeBeau on the other earnings report that we're watching. Rivian.
Scott, we'll make this much quicker. Look, when it comes to Rivian, just a few key numbers that people are going to be focused on. The fourth quarter, what happened in terms of cash burn? We know the market for EVs is softening up a little bit. And then there's the 2024 guidance. And what's crucial here is the number that they are forecasting, either in terms of production or in terms of guidance. I can tell you that the street is expecting 66,000 vehicles to be delivered this year. They delivered 51,000 last year, produced a little over 57,000. So those are the key numbers
2 minutes.
at. And
2
on
minutes.
the analyst call coming up later on this afternoon, liquidity will be in focus. By the way, Scott, don't forget, must-see interview tomorrow morning on Squawk Box. Rivian founder and CEO R.J. Scaringe. We'll be talking with him not only about the Q4 results, but more importantly, where they are heading into 2024 as they have a lot of big things coming up here preparing for R2 production over the next couple of years.
All right, Phil, we look forward to that. Thank you very much, Phil LeBeau.
Well, it's interesting what you saw at the close of the day, and also some of the tech stocks recovering. So which tells me this really is, NVIDIA is important.
678
because
NVIDIA.
It's also a major
Clear
indices.
bullish
It does affect
momentum
indices, but it's not
upside.
affecting the broader market.
679.
Whether they report, it's a question of, has the stock already discounted what investors
680.
are expecting? So even if they surprise on the
680.
upside, we'll see.
Remember what I told you guys about 680?
The broader market.
681.
Because the broader market is really on individual company earnings.
Who's got the
and
numbers?
What NVIDIA is doing, we already know the AI story. We're all looking at how it's broadening out, who's going to benefit in the future, who's buying, who's going to be making inroads like Intel with their Microsoft deal today. So yes, it does move indices in a big way.
Ooh, Etsy moving down 5.8%.
QQQ, or NASDAQ 100. It's, I think NVIDIA is a third of that. But it's not, I think this is a very short-term reaction. The fear and trepidation going into this print is really quite extraordinary.
So, Pat, two things about NVIDIA that I'm wondering, and that's the guidance.
If they kill it, if NVIDIA kills it, and you're like, what did they just report? 800 plus after hours. 800 plus. But they got to come in and report something shocking. Something shocking, they'll be 800 plus after hours.
A lot. But that's what the consensus is on paper.
Whether they come in with it, we'll see.
Really
We'll see.
Price for, if you have thoughts on that. And then you've got AMD, you've got Intel that are trying not to top NVIDIA necessarily in performance, just put products on the market that from a cost perspective get people to pay attention. How much of a risk is that for that stock going forward?
Yeah, so first off, I talk with not only all of NVIDIA's competitors, but all of their major customers. And they want choice. They do not see that it being a healthy market with estimates of
Who cares what you want?
95% market share in at least the Western.
They can't provide what NVIDIA's
and
got.
They want more. But with that
Well,
said,
at least not right now.
AMD and Intel can't
Etsy.
show up with something
Big
that,
miss
that
from
isn't
Etsy.
competitive. And on the AMD side, they've absolutely
EPS.
shown up
Nice
with a
beat on rev.
competitive part for LLMs. And then Microsoft is going to be, Intel is going to bring out its GPU in 2025. And at least as it relates to training, and if you want the most flexible inference, GPUs are the game now.
Somebody asked if the call is going to matter. 100%. The call is going to matter substantially for NVIDIA. And the reason the call is going to matter is analysts are going to be fishing around for numbers for the back half of the year. And how's demand looking for the back half of the year? I guarantee you. So the conference call is going to matter extensively. That's why we're going to listen to it live on here once that baby gets rolling.
To come out with the next
Lucid. Oh, fuck. They missed. Lucid. How could you suck
they
that
put their
bad?
Competitors in the rearview mirror.
They missed by $23 million.
All right. We're starting to get some of the other earnings. Lucid.
It's embarrassing.
Phil LeBeau has those
It's
numbers.
embarrassing.
Hey, Morgan, take a look at shares of Lucid under a little bit of pressure after reporting a loss in the fourth quarter of $2.09 a share. Revenue coming in lighter than expected at $157 million. The street was expecting revenue of $180 million. They end the year with $4.78 billion in liquidity. That's been a question for a number of people on Wall Street in terms of where's the liquidity? Will they have to look for more liquidity in 2024 or 2025? In terms of production this year, the guidance is for 9,000 vehicles. They produced a little over 9,000 vehicles last year. So that may be interesting for a discussion on the conference call in terms of you've stabilized, keep dropping on the production over the last year. You've stabilized at least 9,000 vehicles. Now the question becomes, what are you seeing in terms of demand, and when do you think you start to increase
9,000 vehicles is literally nothing.
In 24 going into 25. Guys,
Oh my
back to you.
gosh.
All right, Phil, thanks. And that stock bouncing around just fractionally higher. Meanwhile, Etsy earnings are out. Julia
It's
Borden
literally
has those
nothing.
numbers. Julia.
9,000 vehicles.
This is a miss in terms of the bottom line, a wider than expected loss of $1.36 a share. The street was expecting a loss of $1.32 a share. Revenue coming in slightly better than expected at $1.32 billion. The street expecting $1.26 billion. Some of the numbers within the numbers in the fourth quarter, adjusted net loss of $1.09 billion. That's an improvement year over year. They lost almost $1.5 billion in the fourth quarter of 22. The 23 net loss for the entire year, they lost almost $4 billion after losing $5.2 billion in 2022. And they end the year with $9.37 billion in terms of liquidity. Now for the guidance, and this is why the stock is under some pressure here. Rivian's 2024 production guidance, 57,000 vehicles. The street is expecting 66,000 vehicles to be delivered this year. Do the math there. They only produced a little over 57,000 in 2023. Now they're saying they expected to produce 57,000 in 24. Look, they've got some lumpy cadence in terms of production and some switchovers with the plant in central Illinois, but that number is weaker than the street was expecting. Adjusted EBIT loss guidance of $2.7 billion, CapEx 1.75, and they expect a modest gross profit by the fourth quarter. Again, a miss in terms of a wider than expected loss in the fourth quarter for Rivian. Guys, back to you.
All right, Phil LeBeau, thank you.
So for Q4, we're seeing earnings per share of $5.16. That's a beat compared to the $4.64 the street was anticipating. Revenues also a beat, $22.1 billion. Street was anticipating $20.61 billion. And I know we were talking about data center revenue. May as well bring that up. Data center revenue for Q4 coming in at $18.4 billion, higher than the $17 billion anticipated. Similar for auto, $281 million, a little bit higher. And I'll continue to go through the results and get back to you shortly with guidance.
Christina, yeah, stick around. I mean, it looks like the outlook for the first fiscal quarter of 25 is $24 billion in revenue, which I think would be versus
whatever bullshit happens after hours, fucking going up. That's game over. That's game over.
It is a beat, but if you think about the buy-side whisper number that
doesn't matter.
Talking about, $23 billion, some even saying a little bit higher, so it's not a massive beat. That was the big concern.
This is all bullshit.
This earnings report.
All bullshit.
We saw the stock drop
it's back to 750 plus.
There was concerns that the magnitude of the beat wasn't going to hold, and you had some profit taking leading up to it. Could be contributing to the 3% drop that we're seeing right now.
This is going to get bought right up.
$24 billion. It's
all
still
bullshit.
Strong, especially for Q1 guide, but
that's going to get right
not
bought up.
The same type of caliber that we've seen in the
for
two previous
weeks.
quarters.
All right, Pat, want to get your reaction to the numbers that we do have so far with a beat on the top and bottom lines, beats for data center revenue, beats for auto. And to John's point, it looks like a better than expected, or at least stronger fiscal first quarter revenue guidance as well.
Said I expected a beat, and that's exactly what they did. And, you know, it's kind of a double-edged sword when you see availability getting better. Which is, hey, I can probably get more cards to you that you need, but you lessen pricing power. So very positive.
They'll all get bought up over the next.
I think, you know, again, the size of the auto business in the range it is in the 200 million-ish doesn't make an overall huge statement.
I was a short. I'd cover right now
for
and
the
say,
future of
I'm
what
out.
they need to do, whether it's 2, 3, or 4 years down the road.
I would not stay short.
Looking at data center specifically, it looks like the number came in at $18.4 billion for Q4 versus $17 billion expected. And of course, that's what you need if you're going to get revenue.
If you're short,
by $2 billion, you need strength.
Better run for your life.
Data center. What does that say
for
about the continuing data
life.
center demand, and maybe about the other areas, including gaming as well, which you said would be a little difficult to parse out?
Right. So the fact that the number is so high and that they guided for an even higher number next quarter is a reflection of what we heard from the hyperscalers on their conference call. We heard from Amy Hood and
Run
Microsoft.
for your life, short.
We are accelerating our purchasing. We heard from Mark Zuckerberg very specific goals about the amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So that demand is still ramping through the year, and that's reflected in these numbers. I would just say Christina did a very good job reporting that the whisper number on the buy side was so much higher than the consensus number that that because they didn't quite get to that number, maybe the stock isn't the upside that it would ordinarily with this kind of result.
All right, we're going to go back to Christina.
The guidance was a huge beat also.
Pat, I'm I'm going to go to you here because just looking at first quarter fiscal 2025 outlook here, in terms of margins, GAAP and non-GAAP gross margins expected to be 76.3, between 76.3 and then 77%,
685,
respectively, plus or minus 50 basis
687.
points. I guess walk me through the importance of gross margins as we do look to another year for this company where the expectations have been so strong and where, interestingly, the stock is now trading up about 1%.
Yeah. It's going to be up a lot more than that.
Had pricing power for the past 18 months, particularly on its new line. When you can't get it, you can essentially name your price. And a car that would normally go for $20,000 being sold for $40,000 and even more on the open market, it's great. On the flip side, your cost of goods sold from folks like TSMC and the folks doing the high bandwidth memory are charging more. But net, the margins look incredible, and I'm glad to see there wasn't necessarily a movement down that you might expect as supply from TSMC wafer and packaging improve. So it's impressive.
Gil, in a way, it's remarkable that the move that we've seen in NVIDIA thus far, was initially lower. Now it's fractionally higher. And of course, you've got to wait for the conference call for all kinds of color. Executives will have a lot to say as the afternoon commences. But this is a stock that the options market was expecting to have a dramatic move. And so in a way, Gil, it seems like modest moves based on these strong numbers might be a win for NVIDIA.
Yes, and I would say that as we start looking towards the conference call, what we're really going to be listening for is commentary about 2025 and 2026. I'd say on the last conference call, Mr. Wang did a good job of talking about the vision of why he sees this cycle continuing for a couple more years, as Patrick reflected. I think there may be more of a need for him to be specific. Orders coming in for 2025. Maybe levels of backlog. That's what we're really going to be listening for to justify another move up from here, because the multiple is only low.
Yeah, buddy, you get on board or you're not going to be on board.
2025 and 26. So that's where a lot of the discussion is going to migrate to, especially on the conference call.
Okay, Christina has more from this earnings report.
$1,000, big guy.
Yes, I was just quickly going through the CFO commentary, and you guys bring up data center revenue. Data center revenue did climb 38% sequentially, so quarter over quarter. And a big portion of that data center revenue actually does come from China. Previously, the company has said about 20%. So in the CFO commentary, they did say data center sales to China declined significantly in the fourth quarter due to U.S. government licensing requirements, something that we already anticipated, but points to the strength in demand if such a strong portion of that pie was weaker, and yet they still managed to beat 38% quarter over quarter, an increase for data center revenue. So that's seen as a positive. There's no other mention of China in the entire CFO report, but I'm sure there'll be more on the call.
Interesting. Gil, I'm going to go back to you on that since I did ask you about China earlier, and the fact that they do seem to be offsetting that sales pipeline that was going to China now to other what's the word I'm looking for? To other customers, what that tells us about the demand picture versus production.
692.
I guess I should say versus demand versus the supply.
I think that's a new after hours high. 692, 694.
Well, that's right. There's more than enough demand right now, so the shortfall in China isn't as important.
695.
The Chinese market is incredibly important, and there's a lot of dynamics at play. The fact that we are limiting chip sales to China is one of the reasons they're limiting sales of iPhone in government agencies. So we have to see that change. The Chinese aren't very happy about the fact that the government is making NVIDIA sell them inferior chips. Mm-hmm. That's not something Chinese want to hear. So again, I would look at sales to India, sales to Singapore, sales in gaming as being proxies for those chips still making it into China right now. Later on, there's going to be a solution that's acceptable to the U.S. and the Chinese government. Right now,
look out if it hits 700, 702, 703.
Okay. Christina, Gil, and Patrick, thank you for joining us.
Thank you.
Up next, much more on NVIDIA's big report. What
704, 705,
the broader tech sector in the months
707.
ahead? That's after this quick break. Overtime, we'll be right back.
Look out above 715. There it is. I told you guys. I told you. As soon as I heard those numbers, And the stock was like, what, 650 or 660, whatever it was. And I told you what I say. I said it 100 times. I said, this is all bull. You know what? I was in the moment. I was cussing. I'm sorry. But I'm like, this is all bull. I'm like, dude, they're going to buy this thing right up. They're going to buy this thing right freaking up. And then they're not going to stop buying it up for a while. After hearing those numbers, unless the conference call's bad, this baby's on its way to $1,000. That's the bottom line. It's on its way to 1,000. Unless the conference call is horrible, which we're going to listen to the conference call live on here when it starts. Unless it's horrible, this baby's on its way to 1,000. So, yeah, I'm just like, that was such a hilarious move after hours. I was like, okay. Let's go ahead and pull up NVIDIA's IR page here. Too soon. Record quarter. So revenue was up 265% versus a year ago. Data center was up 409% versus a year ago. Full year revenue up 126% for the company, which, if you're growing your top line now 265, but your full year is up 126, means you have an acceleration of growth that's going on in your business. So revenue up 265%. Gross margins up 12.7%, 12.7 points. That's just ridiculous. Operating expenses up 23%. Operating income up a shocking 983%. Net income up 769% year over year. Diluted EPS up 765%. $1,000 incoming. Oh my gosh. Absolutely ridiculous. Ridiculous. Incredible numbers here. Incredible. Outlook, $24 billion. That's all you need to know. Like, flying. Yeah. I mean, we'll see what happens on this conference call. It's going to be a very interesting conference call. But based upon all the numbers, there's no doubt in my mind this baby's on its way to 1,000. Wow. I can't wait for this conference call. Oh my gosh. Based upon what I saw from those numbers, and if Jensen comes out, it's a good conference call. He's talking about demand is for years to go in the future, and this is a multi-year cycle in regards to chips need to be needed, blah, blah, blah. As long as he can, execute on the long-term vision there, this is little money. Like, this stock will just keep getting bought nonstop all the way to 1,000 plus. Like, I think NVIDIA is going to $1,000 to $1,500. And then at that point, I think we'll talk about, okay, is NVIDIA's run about over now in terms of at least a short-term run. Don't ever count against NVIDIA over the long term, because we do know NVIDIA's, the stock's up over 150,000% since it went public. In the past 10 years, NVIDIA stock's up over 15,000%. So you don't ever really want to bet against NVIDIA over the long term, right? But if this stock runs to $1,000 to $1,500, like it's probably going to do now at this point in time, then at that point in time, I think you can start to have a conversation about, okay, maybe NVIDIA's big short-term bull run is about done at that point in time. But, that's a long way from here, right? So that's kind of my thought process here. But the conference call is obviously going to matter. Jensen's got to be able to lay out the long-term future. And as long as that's laid out, whoo, baby, moving and grooving. Wow, 7:23 before the call.
On NVIDIA and its impact on the AI trade. Let's bring in Lux Capital co-founder and managing partner Josh Wolf. Josh, it's great to have you back on the show on a day where we are seeing NVIDIA, sort of the main player when you talk about so-called picks and shovels of generative AI. You're seeing them report earnings that are up 769% for income year over year for the quarter. It speaks to how quickly and how aggressively AI applications, or I guess the ability for infrastructure for applications, is being adopted. Walk me through it.
Well, it's interesting. It was probably 8 years ago, I got a preview of NVIDIA becoming the soul of the new machine. We were investors in a company called Zoox. Amazon would buy these guys. And I was like, what are these guys training these new machines on for autonomous vehicles? And they said these new NVIDIA chips. That was when NVIDIA was a $15 billion market cap. At the time, Intel was a $150 billion market cap. You fast forward to today, over $1.8 trillion, just absolutely incredible. I do feel, though, right now you're seeing a flood of retail investors start to get excited about NVIDIA. They're probably 5 years too late. I always say that you want to be today where you should have been 5 years ago. you have a dynamic where $1.8 trillion market cap against Google, roughly $1.8 trillion market cap, they're generating 60 billion of revenue. Remember, Google is generating 60 billion of cash flow. So I would just say it is real. The infrastructure build out is serious. And it is also a time for caution and not to see this as like some crazy meme stock. This is being, in my sense, overbuilt right now, which will be massively deflationary for many of these AI chips.
Interesting. Okay, so when you say 5 years too late, what, especially as a retail investor, and I know you're focused on the private markets and VC venture capital specifically, but when we talk about 5 years too late, what would be right on time right now?
You know, it's really interesting and almost a little bit contrarian. Everybody is racing to the future right now. And, you know, it's a time when rates have risen for the past 2 years. When rates are rising, it flips the dynamic that we saw for the past 10 years, which is low rates are like a tractor beam for the future. They are pulling far out, fanciful ideas that are maybe 20-year things into these 20-month frenzied projects. Now with rates rising, a lot of entrepreneurs and a lot of venture capitalists, you have to ask the question, have you learned the lesson of the past few years? I know we're in an election year. I know the White House and the Fed want to create a wealth effect, want to fight inflation. These two things are sort of incompatible. I actually think that the contrarian thing to do right now that people are going to realize 5 years hence is not race to the future to fund space elevators and fusion and all kinds of crazy stuff that we ourselves love to fund, but we like to reduce that gap between science fiction and science fact. Right now, we're obsessed with the theme of maintenance. You think about CapEx. There's two.
So it's interesting. This is another man bearish on NVIDIA. Just another man bearish on NVIDIA. Oh, 5 years too late. I mean, geez, it cracks me up. You know, it's just another person, you know, it's just out there just talking, trying to talk down the stock. And it's just so many, so damn many. I don't know if I told you guys, I was watching Fast Money last night, right? In Fast Money, what were they all talking about when they brought up NVIDIA at the beginning of the show when it was all NVIDIA? It was all talk about the downside, what could go wrong here, all bearish talk, right? Oh, no, if they don't come in and do this, this is going to be devastating, blah, blah. It was all downside talk. And that just is another sign that it's like, you know, people are trying to top call and keep trying to top call this. And it's like, you listen to these folks talk, you listen to this man, you know, retail investors 5 years too late, you know, and you watch all these guys on Fast Money and whatnot, and it's just like, geez, they won't give them any respect, any credit for what's going on here and the numbers they're putting up. And at the end of the day, other people are just like, dude, like, you know, the baby's going to 1,000 to 1,500. Like, do you want on or do you not want on? Like, it's really a question of that, right? So it's so fascinating to me, man. It's so fascinating. Yeah, I mean, you know, if you were in a real true bubble, a stock like NVIDIA would be trading at 100 plus forward PE. Right now, its forward PE is probably actually in the high 20s, right? Which is not even high considering the growth rates this company has. You need their business to completely fall apart for that to be like a high forward PE, right? So, you know, it would be in the hundreds, their forward PE, if you were in a real bubble. And guys like this would come on and say, oh, you need to be buying the stock. Numbers are incredible. And on Fast Money, all the talk would be about upside potential and not downside potential. And so, I don't know. That's just kind of my thoughts there. Okay, let me get this conference call. Oh, ready to roll.
Industry that they're targeting in order to pull ahead. Isn't that the case right now?
It is. And again, do you need OpenAI plus Anthropic and Claude plus 10 other large language models? Many of these things are going to see a winner takes all, and the massive amounts of money that they're raising, we're talking billions of dollars, and you nailed it. A lot of that money has been and is going to NVIDIA. But I think that starts to level off. What's really interesting to me is the next wave. And that's not going to be just large language models. That's going to be in robotics. I can tell you that there are some really cutting edge teams right now coming out of the likes of OpenAI and DeepMind.
And guess what? You need chips for all that.
To focus on AI for robotics. It's a totally different infrastructure that they're going to need. Same thing for biology, automated wet labs and robots doing scientific experiments. That, to me, is the near-term future of maintaining the cutting edge for both biotech and for AI. Then you talk about defense, and you're still going to see a huge amount of AI in defense, but specifically around maintenance.
That's exactly my question for you, Josh, because you did also just publish this letter today. Two of the names that are trading higher in sympathy with NVIDIA are Palantir and C3AI, which both contract with the Department of Defense. So the fact that you use the B word, bubble, where defense tech is concerned, what does that say?
Well, again, I always like to be early to things, and sometimes being early is the same thing as being wrong. I know that, okay? But in this case, defense, it has all the hallmarks, not today, not in the next 2 or 3 years, but in the next 4 or 5 years, it's going to be a bubble. Why? You have companies like Anduril and Saildrone and Hadrian. Adrian just announced $118 million Series
wow,
B. These
look
are
at
all
Dutch.
ex-portfolio
Look at
companies. We're super proud of them. They're rebuilding the arsenal of American democracy. What happens next? Copycats try to follow. They look at them as proof positive. Hey, those guys just raised a lot of money. Their valuations are increasing, tens of billions of dollars, revenue coming in, billions of dollars of bookings. We can do the same thing. What happens next? Investors follow, then fund of funds. And the fund of funds thing is interesting because you get a moral layer where you're disconnected from some of the ESG concerns of being involved in a kill chain. That's something that we as investors had to say, are we comfortable with that? So I think you're going to have a flood of capital coming into defense. Eventually, it's going to be a bubble. We're 5 years away from that.
All right. Josh Wolf of Lux Capital. Always great to have you on. Thanks for joining us.
Great to see you both.
And NVIDIA now up 8% in overtime. Coming up, we're counting you down to the call.
731, folks. Is that a new high? Is that a new all-time high?
What we'll be listening for is ahead when overtime returns.
Is that a new all-time high for NVIDIA? 732? Think so.
Good afternoon. My name is Rob, and I will be your conference operator today. At this time, I would like to welcome everyone to the NVIDIA's fourth quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Simona Jankowski, you may begin your conference.
As AV algorithms move to video transformers and more cars are equipped with cameras, we expect NVIDIA's automotive data center processing demand to grow significantly.
Yep.
In healthcare, digital biology and generative AI are helping to...
I mean, what did Elon Musk say? It was either the last conference call or the conference call before. Elon Musk said specifically, he's trying to get his hands on every chip he possibly can from Jensen, right? I mean, when Elon Musk says that, I think that matters.
Trading the NVIDIA Clara healthcare platform and NVIDIA BioNeMo, a generative AI service to develop, customize, and deploy AI.
My 3 biggest stocks, Meta, Tesla, Amazon, all 3 are trying to get their hands on as many NVIDIA chips as they possibly can.
We have so much to share with you at next month's GTC in San Jose. So be sure to join us.
Oh yeah, that'll be exciting.
We look forward to updating you on our progress next quarter.
Yeah, okay. So good conference call overall. NVIDIA's climbing to 1,000. Every dip will be bought in that thing for a while. Now, I want to listen to the Bears real quick here before I sign off. It looked like they had Dan Nathan and they had Guy Adami on there, and those guys have been so bearish for a long time. And so I'm looking forward to hearing into those. But I want to explain something to everybody real quick here before I listen to the Bears, okay? Listen. NVIDIA continues to grow their business because there's like this thought process on Wall Street they don't really understand. They think like, okay, these guys are just going to buy a bunch of H100s and then that's it. It doesn't work like that. The problem is as these AI applications and other things continue to boom and get bigger and bigger and bigger, you have more needs for more chips. Now, simultaneously, you're not... Like these people think like they're just going to order the H100s and then that's it. No. Guess what? Then you got to order the H200s. And then again, guess what? A year from now, 2 years from now, there's going to be an H300 in the market and an H400. And so the big tech companies they're basically forced to continue to upgrade to the next chip and the next chip. Otherwise, you start to fall behind your competitors, right? Because let's imagine your competitor has all H300s a few years from now, and you're still running all H100s. Well, you're at a big disadvantage now at this point in time. So they have to keep trying to upgrade to the next chips and the next chips and the next chips, as they've always obviously done over the years, right? And so your technology, your chips, end up getting outdated over time, right? Those H100s that we look at as so epic now, in a few years from now, that's like old technology. That's like, whoa, H100, oh, so ghetto, what a horrible chip you got there, right? When they're going to be on the H400s or 500s. And so, no different than, you buy an iPhone, and it might last you a few years, and eventually it breaks or you need to get a new one, right? And the difference between an iPhone and these chips, though, is you can kind of do without getting an iPhone if you really want to and it's still working, right? The problem is when it's life or death as a business, you can't get away with that. you have to continue to upgrade to the next chips and the next chips and next chips. And so it just creates this great dynamic for NVIDIA for quite a while, right? Until somebody catches up with them, which, we still haven't seen. And it's really tough to catch up with them, right? Now, I want to go ahead and before I sign off here, I want to hear what the bears had to say in regards to these NVIDIA results here. This should be interesting.
Welcome one.
Oh, and this guy too, Danny Moses, Mr. Big Short.
NVIDIA, you're going to hear that name a few times here. Bet the over.
This is going to be good.
Shares are surging after the chip maker
posted
record revenue, a whopping 265% increase from last year on the strength of its AI business. Now, the news sending shares of other chip makers like Supermicro and AMD much higher in after hours as well. The conference call for NVIDIA just started, and CNBC's Christina Partsinevelos has the numbers and has been monitoring the call. Christina.
Well, the call just started, so I'm going to get on it as soon as we finish this. But NVIDIA is surpassing expectations yet again. A lot of it, though, is driven by data center revenue. It's bread and butter, which grew 38% quarter over quarter to $18.4 billion. Large cloud providers represent now more than 50% of that data center revenue, with NVIDIA saying in their report that demand is growing among other verticals, including auto, financials, as well as healthcare services. All sectors, though, for NVIDIA, revenue did beat. Auto is the only one declining year over year, and did in 20% of total data center revenue. So it declined significantly in the fourth quarter due to.
See, that's the one y'all were dissing in the chat about she talks too much or whatever. That's who you were dissing. You were dissing Colette. I bet you didn't know. She makes more in a year than your whole net worth. No, she makes more in a month than your whole net worth. I bet you didn't know that. Now you're thinking differently, huh? Now you're thinking, damn, how was I dissing on Colette? She could change my whole life. I know you, chat. Now you're wishing you never dissed on her in the first place. You're like, I would give up everything for her.
20% of total data center revenue.
Gotta watch who you dissing out there.
It declined quite a bit. And NVIDIA was still able to post a 38% quarter-over-quarter growth, speaking to the strength and demand from other markets. So once that news came,
when she pulls up in her LaFerrari, you're going to be bowing at her feet.
In the press release,
that's what's going to happen.
Saying that generative AI is at the tipping point, implying increased demand still lies
ahead. When she rolls up in that Bugatti,
in this AI trade, which is exactly what investors were looking for heading into this report. But we knew the options market was pricing in 11-point swing. What are we at? 10% now?
Yeah, there you go. 10% right on it. The company clearly hitting on all cylinders in the most recent quarter and looking for bright skies ahead. Christina, you'll keep us updated on any highlights from the call. We'll be back to you, I'm sure, several times. Let's kick this one around a little bit, shall we, Guy?
Well, the gross margin stuck out to me, I think 76%.
Here we go, Bears.
So good for
what
them.
We got?
I mean, listen, great quarter. There's nothing not to like in terms of the quarter. Here's what I'll say, and people are going to at me on Twitter all night long, but the magnitude of the guides higher, which they continue to do, become less and less. At a certain point, one has to wonder, what's the right price to revenue? Right now, if this company is trading at $1.8 trillion, which is probably where it is at $740, you're talking about a company that's trading either side of 18 times revenue, which in this world is expensive. Now, people will say at this growth rate, they will grow into this valuation at some point. Maybe. We'll see. But, it is an expensive stock on that metric alone.
Danny?
If you traded this valuation, you better beat and guide higher, which they did. But at some point,
at a 35 fucking port
cyclical. And I distinctly remember
you're talking like it's 160
when fiber optic was the big craze.
Microsoft trades at a 35, Danny.
Right, we were growing lasers and everything, but at some point, the secular trade becomes cyclical, and you can't maintain these margins over time. But for the stock to trade down like it did in the aftermarket quickly and trade back up, 1.6, 1.8 trillion. I don't think it matters what the market cap is.
Can you, that's we were talking earlier, can the law of large numbers make the future harder for this company?
For sure. At some point, the margins.
It gets so heavy.
Sure. It's a great company. They're in a great space. I would never short the stock at these levels, but let's see what happens.
It's getting ready to be a pretty decent short. I tried doing it a couple times last year.
Oh my gosh. Fucking.
And again, I never thought
to give up.
Or the consecutive magnitudes of the beats and raises that we did. So a quarter like this is clearly a great quarter. When I look at really what was expectations for the guide right here, consensus was for the current current quarter that we're in, about $22 billion in revenue, okay, and about a little less than $5 in earnings, and they guided to 24, so that's up 9%, okay, in the quarter. But some of the whisper estimates were the buy side. This was in print. These were like brokerage houses that talked to a lot of these buy side accounts. They were expecting maybe 24 to 25 billion. So the guide came in below the whisper. So when you
and guess what? They're going to come in and beat their guide, Dan Nathan. Put two and two together, buddy.
Big pools of capital are not trading right now. Okay, so we had this swing.
So do you depart from what Guy said a moment ago? There's nothing not to like in this report?
No, there's nothing not to like other than expectations, right? So that, like, we talked about this a little bit last night. So if you're a hedge fund, right, and you were expecting maybe a guide to 24 or 25 billion, and they guided to, maybe just about 24 billion, you're going to expect them to beat that if everything continues to go. But are you buying the stock here right now? And I think not. So let's see how the stock trades. Where it opens, it's going to open up 10%.
Oh, it's not even close.
Okay, shorts are probably covering in the aftermarket right now. Let's see if big money is going to come in and buy this stock. I think big money probably sells a little bit because of what Guy started out by saying. The magnitudes of the beat are getting smaller and smaller.
The stock price creates the narrative. To Dan's point, if the stock
Lord.
right now, it would be, they beat and got it up, but it wasn't enough. You didn't get enough. But because it's up. So the difference in a 1.5 or 6 trillion and 1.7 trillion market cap here, to me, is meaningless. I know it's a lot of $300 or $400 billion. It's a lot. But to me, it's just the narrative.
So as we're talking about that law of large numbers, when you said the
Oh, that was beautiful. That was absolutely beautiful, folks. Oh, man. Woo! Woo! Very entertaining. Always very entertaining, folks. Always very entertaining. But anyways, so, they came through. I mean, it's Super Bowl, and they won it. Tom Brady, Patrick Mahomes. I mean, just amazing at Jensen, as always. And, that baby will roll for a while. So, anyways, guys, appreciate you joining me. Thanks for being here, as always, chat. I hope you had some fun. I hope you learned a little bit. I hope you were entertained. All right, guys, much love as always. Appreciate you joining me, and have a great day. Peace.